please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, on to the latest development in the alleged PNB scam. Now, as the investigative agencies turn up the heat on the accused in the PNB fraud case, Nirav Modi and Mehul Choksi are believed to have snubbed the Enforcement Directorate. Sources say the duo have written to ED refusing to appear before the agency. Utkarsh Chaturvedi is here with more details on that. Utkarsh, tell us what is the latest development with regards to this case.
Both the duo, Nirav Modi and Mehul Choksi, have responded to the summons of Enforcement Directorate, stating that they will not be able to come before the ED for questioning. Now, the content of the letters are same, just the reasons are different. Mehul Choksi has said that he is travelling and that is why he will not be able to come. And on the other hand, Nirav Modi has said that he is busy with business. Now, the reasons behind this letter is merely protocol. Remember, both of these duo are fighting in the court, saying that whatever they have done is legal and there is no scam. Also, they have gone ahead in the court asking to defreeze their assets, to pay salaries and to carry on their business as usual. Now, the fact that they do not acknowledge the ED summons really goes against them in the court, and that is precisely the reason why they have responded to the first summon. ED, on the other hand, will follow the protocol. ED will be issuing the second summon and the third summon, and then only they can really go ahead and start the proceedings of extradition, whether it be, interacting with the Interpol or issuing a red corner notice. We will have to really wait and watch. One, when does ED issue the second summon? That is a mere protocol. ED will do it either today or tomorrow. And secondly, and more importantly, will the duo honor the second summon and be present in front of the Enforcement Directorate for questioning?
All right, Utkarsh, thanks a lot for that. We'll keep an eye out on that story as it develops. But let's move on. After building the IT infrastructure for Aadhaar and the GST network, Nandan Nilekani could be involved in a new assignment with the government. This time, he could help build the infrastructure necessary to roll out the government's flagship announcement in the union budget, the National Health Protection Scheme. Rituparna Bhuya filed this exclusive report.
The National Health Protection Scheme will have a very robust IT infrastructure in the back end, because this IT network will connect the National Health Board, which will be at the core of NHPS, with the data regarding beneficiaries, as well as to the primary health centers, which will be carrying forward this scheme at a ground level, and also with different schemes offered by packages offered by the health insurance companies participating in NHPS. We have now been told by our sources that the government will be seeking feedback from Mr. Nandan Nilekani regarding setting up of this IT infrastructure. In fact, one meeting has already happened regarding this, where Mr. Nilekani and officials of Niti Aayog, Health Ministry and NIC huddled up to discuss the initial contours of this IT infrastructure. As of now, however, we do not know in what capacity he will be continuing to advise the government regarding setting up as well as designing this IT infrastructure. But we have also been told by our sources that the government is now giving final touches to a cabinet note which will formalize the structure of the NHPS, and this cabinet note is likely to be taken to the cabinet for approval in the next couple of weeks.
Okay, thank you, Ritu, for that. But moving on then, science and technology company Merck plans to invest 16 million euros in India, but a large part of its biotech and biosimilar investment is currently focused on countries such as China. Ekta Batra caught up with Udit Batra, the member of the Merck Executive Board and CEO of Life Sciences Business, and quizzed him on where India stands when it comes to biosimilar investments and how really India can fill that gap.
It's a good opportunity to invest in China, right? In Nantong, we've invested over 90 million euros to build a state-of-the-art plant to service our customers there. In China, we have a distribution center and an assembly center that we've just put up for single-use biomanufacturing. We also have an emerging biotech grant that we give out in China, because there are small biotechs that want to leverage our capabilities, but also are picking up innovation. So that's China itself. So there's a lot of opportunity in China. India is similar. So if you just look at the biosimilars market and the need for biologics in India, for countries with similar affordability, India is still, the penetration of biologics is still rather low. Right, so there is clearly an opportunity.
South Korea and China currently becoming the go-to places when it comes to biosimilar investment. Is that how things are working right now? And where does India probably prioritize in terms of scale of investments vis-a-vis these two countries when it comes to biosimilar research or biotechnology?
So Korea is quite far ahead, right? And there are a couple of players in Korea who are supplying globally, not just biosimilars, but also innovative biologics as excess capacity. China has many different ambitions, and as I mentioned already, from a biotech perspective, there is a lot of activity. It also has two segments, India for India and India for export, right? And the biosimilars market and the biologics market will pick up depending upon the demand, depending upon how the demand picks up in both of those segments. And I believe there is a pretty significant future. The need is there, the capabilities are there, and it's now a question of just unlocking it. And so I think it's a matter of time.
Do you think that maybe there is a regulatory landscape which needs to be eased out when it comes to biosimilars in India as well?
From my latest understanding, there has been an improvement and simplification of the regulatory pathway. And this is why you see a bit more optimism for biosimilars for India. India for India, manufacturing in India for India, because the regulatory pathway has improved. And I wouldn't be able to go into the deep specifics there, but my understanding is that it has improved, and that leads to the improvement in the future projections. So I think people are working on that, and there are already steps in that direction.
Get a handle on the early rates coming in from Hang Seng as well as Shanghai. The Hang Seng's actually opened strong with a gain of nearly 365 points, mildly off the high point of the day, but then again still sitting with a 1% gain among the outperformers in the Asian indices. Shanghai markets, which opened yesterday after the whole Lunar New Year holiday, ended in the green yesterday, continuing their green, still underperforming the other Asian peers. The Korean market still continues its outperformance, led higher by Samsung Electronics. The SGX Nifty earlier indicated a start at 30 points in the green, then fell to about 8 points, now recovered a bit from there, indicating a start above that 10,400 mark. So we'll watch out for those cues coming in. But let's move on. The sale of the first batch of electoral bonds will take place on the 1st of March and will continue till the 10th of March at authorized SBI branches. The bond that was notified on 2nd January will be valid for only 15 days from the date of its issuance. As per the scheme, only political parties which have secured at least 10% or at least 1% vote in the last state or Lok Sabha elections will be eligible to receive the bonds from SBI. This move is aimed at bringing transparency in the political funding system.
Okay, moving on then, the focus is on investing in India and not profits. That's a categorical assertion coming in from the global CEO of Uber. Now, CNBC TV18 held a special town hall at IIT Delhi where Dara interacted with students. Uber CEO also said that he wants India to become the second tech center for the company outside the Silicon Valley. And also when asked about SoftBank being the key investor for both Uber and Ola, Dala said that for Masayoshi, it's not Ola versus Uber, it's Ola plus Uber against car ownership. Here is a slice of that very interesting conversation.
I want to make a big bet in India. I think the talent pool here is extraordinary. I think the work ethic here is terrific. I think people are hungry to succeed. I love the entrepreneurial energy in India. So I want India to be our second tech center. You know, San Francisco is the headquarters, but India is going to be a very, very tech center. And who knows, maybe 10 years from now, India will be our first tech center. We'll see.
What's the hiring plan here?
Multiples of where we are now. Multiples of where we are. I'm pushing our teams hard.
Who is the leader that inspires you today?
I think Jeff Bezos is an incredible leader for Amazon. I think he's built a founder who can scale the way that he's scaled, a founder who can succeed across different products that he's built, and a founder who takes failure in stride and just keeps innovating is someone who is worthy of great admiration. If we can be the Amazon of mobility, then I think we have a win on our hands.
You have an interesting situation in India where SoftBank is also the largest shareholder of your fiercest competitor, Ola.
Yes.
So how does it all work?
Well, you'll have to ask them that question. I think, listen, SoftBank is a very big picture investor. And when I talk to Masa about his beliefs, Masa's core belief is that the ride-sharing space is a space. And when I talk to Masa about his beliefs, Masa's core belief is that the ride-sharing space is a space that's going to grow. So I think SoftBank isn't thinking about Ola versus Uber. SoftBank is thinking about Ola and Uber versus car ownership, and I think that's a pretty darn good bet.
But still, I mean, from a practical perspective, you're competing with them in a market like India. You know, SoftBank clearly putting big money into Ola as well, which it's using against Uber to compete in a market like India. What's the conversation that you then have with Masa?
But I view this as we're not spending against Ola, we're spending against car ownership. We are actually building mobility as a service, and I think our competing with Ola, it's a healthy competition because it forces us to improve our product, it forces us to be innovative, it forces us to reduce prices, and ultimately that's going to come at the cost of car ownership.
Well, let's take a check of what's happening in the world of commodities, and Manisha Gupta joins us with all that is happening in the world of commodities. Manisha, good morning. Tell us more.
Hi, thank you so much for that. Well, yes, the US dollar has seen a pause in the rally. We actually saw it decline by more than 0.25% overnight, and that has been supportive for commodities. If you look at the crude oil prices, another thing that is working for it is a surprise decline in US inventories. Also, if you look at the imports that are coming into US, there's a record decline in that as well, while the exports are at 2 million barrels per day. So all these figures have been supportive for the crude oil prices, which gained 1.5% to 2% for both the varieties overnight. And the Asian markets are trading positive right now for crude as well. The strength also has seen a comeback in case of the metal prices. Yesterday, after China came in, we saw a sell-off in commodities where steel prices fell by 2%, and you saw sharp declines for nickel and zinc as well. But in Europe and US yesterday, there has been some buying, and the Asian markets also seem to be taking support from the decline in US dollar. Of course, all of these markets will watch out for more Chinese participation coming in. There also is the Bank of England, Bank of Canada interest rate meets in the next week. A much of direction would come in from these consumer countries as well.
All right, Manisha, thanks a lot for that. We'll watch out for all the cues coming in from the commodity space. But let's start from the cues coming in from the F&O space at the start of March series. A couple of things that really stood out from the February to March rollovers. The first one is that the rollovers at 62.3% stood below the 3-month average of 67.5%, so less conviction seen out there. A lot of open positions rather on either side taken as far as the March series is concerned. Why do I say that? Well, because the Nifty is starting lower in terms of its open interest as against the 2.5 crore, 2.2 crore shares that we saw in the previous two series. So less heady, 1.86 crores. And the FIIs, earlier they were long, 68%, 70%, as high as 80% at the start of series. In the previous three series, right now, it's on an even keel, marginally in the favor of shorts. So that is something we'll watch out for. The markers in terms of open interest are placed at the 10,000 put and the 11,000 call. So that again, we're equidistant away from both these levels. So we'll watch out for that. The three stocks that really stood out in the Feb series, they've seen a fair amount of rollovers. So PC Jewelers, which was down about 42% in the series, has seen a rollover of 71%. Slightly higher in terms of rollovers were in Punjab National Bank. 37% was the correction on that stock in Feb series. Positions rolled over to the tune of 82%. And finally, the most volatile, the most interesting stock in the F&O space in Feb series was Fortis Healthcare. Series high was 160, series low was 107. The stock is closer to that 145 mark right now. Almost all the positions, 94% of the positions were rolled over into the next series. So a lot of conviction seen there. Let's see what happens.
Okay, looks like it is going to be interesting March series as well. A lot of important cues lined up for that particular one. But that's all the time we have on Power Breakfast. Keep watching CNBC TV18 because Bazaar Morning Call comes up next.